discovered the power of infinite banking. And first, I want to ask you, if you are watching live, I'd love for you to share with me in the comments, or I guess even if you are hearing this afterwards, have you yet personally discovered the power of infinite banking for yourself? And if so, I would love to know why. I would love to know why specifically you are looking for infinite banking. Now, we all have our own reasons for exactly why we do things, but I want to tell you exactly why I discovered this, and maybe you can relate a little bit to my story. So, I have a very clear set of objectives that I was personally looking for when we first started looking at life insurance and infinite banking. And these are first, we really wanted to have savings that we could use for anything we wanted. So this could be for emergencies, or for putting a down payment on a house, or buying investment real estate, or for eventually sending our kids to college, or growing our business, or hiring a coach, or whatever we wanted to do financially. We wanted to have capital that we could get to so that we could use it for those things. Now, we also wanted competitive growth. That meant as much growth as we could possibly get with this tool. And we wanted accessibility. And that was one of the most key pieces of all. So this is part of my story. And of course, I don't have time to share all of it with you right now, but I learned these objectives because of failure and because of things that we did not do correctly in our own financial life. And really what's interesting is that any big lessons we learn are probably a result of something we did incorrectly. So I want to tell you what I did wrong. So my husband and I were really disciplined savers for a long time. When we first got married, we were even saving during college. And what happened though is we were trying to put our money in something that we just knew was a good place to save. And we were putting our money in the bank. And so we realized that we're not really getting any traction or any growth on this money. We're just putting it aside and setting it in a place where there was very little growth. And now granted, this was back in 2006, 7, 8 timeframe. But at the same time, we were not seeing a lot of growth on our capital. So we're looking at, feeling like you're driving a car and you're pressing the gas, but you're really not accelerating very fast. Like maybe there's something wrong with the engine. It's just kind of sputtering along. And we felt like we weren't getting any growth on that money. Well, we looked at what we could do to even be more secure. And honestly, we were concerned about what would happen if there was a systemic collapse in the country of having our dollars become devalued. And we were looking at possibly a lot of things that could be going wrong. And we're coming up into 2008. And of course, things did go very wrong. What was interesting, though, is that we started putting our money into gold and silver. So many of you may be familiar with investing in precious metals. And we had a really specific reason for doing that. We were trying to keep our capital for a really long time. We were saving a lot. I was working, so was Lucas. And at that time, we had 2 incomes and we were able to save a lot of our money. So we're saving a great deal into precious metals, gold and silver, thinking we're doing a really good job for ourselves in the future. The problem was we didn't foresee having a baby. I would quit my job, become a stay-at-home mom. That's down in income with an extra expense. Then we didn't foresee starting a business. And exactly at the same time, we said, oh, I'm a stay-at-home mom. Now I have all this free time. And looking back, it's a funny story, but we said, let's go ahead and start our business now. We needed capital to get started. And we had all this money tied up in precious metals. And the problem was that right when we needed the cash, we had the value of our money in precious metals dropped in about half. So we'd been putting all this money in and thinking, well, I guess we can rely on this if we need to get to the cash, but we weren't planning on taking it out. We just wanted to keep it for the long haul. The problem was we didn't realize that along the path of our living, we would need access to that capital. And so that taught us a tremendous lesson in that we needed not only to store our cash somewhere that we could access it and tap into it and use it, but we also needed something that wasn't speculative. So even though gold and silver might be something that it is true money and it's real money, the problem is that if you're speculating on the economy collapsing so that gold and silver are going to improve, that's probably not a good bet to be making, and it still is a speculation. So the problem that we ran into was that not only were we speculating, even though it was a good asset, we were in a position that we were not valuing liquidity. And I cannot stress to you enough that this one tiny thing that seems very tiny, having liquidity, is the one thing that we realized we had a tremendous need to have this liquidity so that we could have cash we could get to. So now I say it's really important for me to be able to not only have a guarantee that I'm not going to drop beneath a floor in my money that I'm saving, that I'm getting good growth on it, but I also need to make sure that I can access it and use it. So that's the start of our story. I will probably save the rest of the story till next time. But that piece of our story is really what gave us this insight to understanding the value of liquidity. And that's why life insurance, as you are storing capital by paying premiums into a specially designed whole life insurance policy, and as you are building a death benefit, you're also building equity or a cash value, which is the portion of the death benefit you can use inside of that policy. The reason it is so extremely advantageous is that you get the most growth that I've ever seen on a savings tool. You get the guarantee of not having that drop in value, and you have liquidity. That is access. You have the guaranteed ability to take a policy loan against your cash value, take the life insurance company's money, and be able to use or leverage that asset. And what's really even more profound is that while I use my money inside the life insurance continues to grow and compound. And that loan that I've taken against my capital, I'm then able to pay back in a manner of my own choosing. So I can pay back however and whenever I choose, which means that I'm in control of the payback schedule. Now, those things give me tremendous control. But I really want to stress the reason that we found this in the first place was because we were storing in a place to store cash that was not liquid. So please do not make that mistake. I would love to hear your thoughts on this. And if you would like to hear more videos like this, wherever you're finding this content, whether you are on Clubhouse or on LinkedIn or on YouTube or on Facebook, I think those are our main channels right now. I would love to hear in the comments and hear your perspective on exactly what you are looking for that might have brought you to searching for infinite banking in the first place. There's so much to love about it. There's tax advantages. There's many other elements that we can talk about, but that is what brought me to infinite banking. So I wanted to share that story. Please like this video. Please subscribe to whatever channel you're on. We also have a podcast, and we have so many different ways that we are helping people to gain understanding and knowledge about this powerful tool. And greater than that, we're looking at the big picture view of how do you not only store your capital in a great place, but how do you build time and money freedom? So I'll be back with you next time. Thank you so much and have an amazing day.